No intro, no outro, straight fire. All right, so gonna try to speed through this video. As the title says, how am I approaching Forex in 2026? Rules, risk, and reality, right? So if you're looking for a 10-time flips, Lambos, or signal groups, this video is pretty much not for you. So in 2026, I'm trading Forex with rules, structure, and realism, which I've always been doing this whole entire time. No gambling, no revenge trading, just straight consistency. So in this video, I will break down exactly how I'm approaching Forex this year, my rules, my risk management, and then the hard realities most traders don't want to talk about. So, why is 2026 different? So, I've learned that profitability doesn't come from more trades, it comes from better patience. So, in 2026, straight up, my focus is simple: fewer trades, higher quality setups, and capital preservation. So, I'm no longer chasing every move. I'm waiting for price to come to my area and then I'm changing it. And if you've been sticking with me for a while, you know my area is a point of control. So everything I do starts from a higher time frame. So let's just go ahead and go to the weekly. So before I even think about entries, what I like to do is I mark the previous week's high or low, or high and low, excuse me. Previous week's high, previous week's low. All right. So these levels like pretty much tell me where liquidity is sitting and where price is likely to react and where I don't need to be trading. So what I was doing back in 2026, I was marking up previous days highs, previous days lows, Monday's highs, Monday lows, etc., etc. Though I had more trading opportunities, there's a lot of fake outs, and I'm like, man, what am I doing? What are better ways that I can, pretty much trade less and still get the same quality setups, if not better, right? So again, the setup that I'm focusing on, my main setup in 2026 is based off of liquidity sweeps and acceptance. So drop down to the 1 hour. Liquidity sweeps and acceptance. So let's say price sweeps the previous day's low, right? So I do not enter in immediately. And what I mean by that is this is previous week's highs, previous week's lows. On Monday, price swept previous week's lows. Again, I do not enter immediately. What I wait for in the daily session, I wait for it to close and I ask myself these questions. Did price accept above or above the daily POC? So if price sweeps the low and closes back above the POC, that tells me that the sellers have failed and that buyers are in control. So that's when I start looking for my longs from the POC. My stop will be below the sweep, and then my target will be the previous week's high. So prime example right here, right? Price swept previous week's low. It did what? It closed above the point of control. This will be my ideal entry, stop loss, and then my take profit up here. Boom, giving me a 4%, right? So pretty much no sweep, no acceptance, no trade. Point blank, period. So for entries and execution, again, I don't chase candles. So most of my entries are limit orders. I set pending orders, either sell limit, buy limit, sell stop, buy stop, right? And it's after a confirmation of a clean. So it can be a confirmation of a clean retest or rejection. So like right here, or most of the times because I'm at work, I just set a pending order and I send it, right? So if price doesn't come back to my level, i.e. the POC, I let it go. So missing trades is a part of my strategy. It's cool. You don't want to chase it. You want it to come to you and then do what it needs to do. Now, when it comes to managing my risk, this is the part that actually makes you money and keeps you in the game. So for 2026, always I risk 2% per trade. I don't increase my risk after a loss, and I stop trading, after a certain amount of time. Like if I just keep losing, I'm done trading. I'm done trading. Like point blank, period. I also like to scale out, so I take partial profits at logical levels and then I let the runners run. So honestly, my logical level is half of my position. So if I draw the fib from my entry to my projected take profit, and then I just take 50% of that, and that'll be my take profit one. So once price gets to that level, I'll move my stops to break even. Let's say price gets to that level, I move my stops to break even, and I let the runners run. And whatever happens after that, happens after that. If it reverse on me, then guess what? I would have still secured some profit. If it continues, then I secured my 1%, my additional 1%. But once price gets to 50% of my total target range, I'm securing 1%, and then I'm letting the other 1% run. Right? So the reality of it is most weeks are boring. Some weeks I'm expected to not trade at all. And honestly, that is okay. So trading is not about being right every single day. It's about not blowing up while waiting for a high probability moment. Um, a lot of us get impatient, and we tend to chase trades. That's not the way to do it. Um, if you can protect your capital, consistency, eventually shows up. So who is this approach for? So pretty much this approach is for traders who want longevity, don't need daily dopamine, don't need to be on the charts all day. Understand that patience is a skill. So if you are still chasing fast money, this will feel super slow to you, but slow honestly is what lasts. It's like the tortoise and the hare. The hare thought because he was fast, he was going to beat the tortoise, when in reality, the tortoise beat the hare. Slow and steady wins the race, right? So if you're trading with structure in 2026, comment discipline below. Again, I'll be sharing more of my breakdowns, weekly outlooks, and real trade logic, not signals. I'm not a financial advisor. I'm not a signal chat, right? Subscribe if you want to trade with intentions and not emotions. And I will see you on the next one. All right. So no intro, no outro, straight fire.